As we're waiting for that final result this afternoon from the Tesla shareholder vote, our next guest is feeling bullish ahead of the final vote, raising his price target from $200 to $230 and reiterating his buy rating. Garrett Nelson, CFRA research analyst, joins us now to discuss. All right, Garrett, take us into your thesis here. I mean, we've seen the shares drop precipitously here since the original pay package was voided. So what makes this that much different now that we have this potential shareholder vote? And do the fundamentals for the company change?
Sure. Thanks for having me. Well, this really would remove a major overhang on the stock that's been lingering for weeks and months now, ever since the Delaware court ruling came out. So in our view, it's not surprising that the shares are currently trading about 7% higher in the pre-market. In a worst case scenario, if this was not approved, if his 2018 compensation plan was not reapproved by shareholders, given the diversity of his business interests, especially at this point, now that he owns X and is re-involved with AI, with the XAI again, we could have seen a scenario where he could potentially have walked away from the company. So.
I mean, would he really?
So investors are really
Garrett,
sending a message that they want the company to stay the course.
Would he really have walked away from the company?
We think it's a possibility when you consider that he, the 6 businesses that he's involved with, not all at once, but perhaps over time, selling his remaining shares and moving on. But when you look back at his 2018 compensation plan, it was entirely incentive based. There was no salary, and he's really delivered for shareholders over the last 5 to 6 years. And so I think that's why you've seen just this week a number of very large investors come out in favor of this, because Elon's incentives are really aligned with the interest of shareholders. And in fact, he has delivered on those very lofty thresholders from the compensation plan. And so, I think what you're seeing is the overwhelming support of retail investors for this. And really, he just needed a fraction of support from institutional investors, which it appears that he has gotten.
Garrett, there has been, though, concerns out there from shareholders really over the last several months, last couple of years, just about these distractions that we have heard when it comes to Musk, when it comes to his other business interests. Are any of those concerns warranted, do you think?
Of course. You consider someone who owns a half dozen very large businesses, such as Elon. But, in our view, if anyone is capable of that juggling act, it's him. And he's shown that over time. You look at the total returns since the compensation plan was approved, the stock is up more than 1,000%. And so I think there's a recognition, appreciation, especially on behalf of retail investors, that he has helped deliver for them. And so now it's time for them to deliver for him in that compensation plan that was agreed upon 6 years ago.
Okay. And so as we're looking at all of the different undulations for Tesla's share price and the activity, I mean, this environment that Tesla is in is far different than years past and the returns that investor shareholders have seen before, especially with the demand generation cycle that all of the automakers are trying to navigate through right now. So what does this next leg for growth potentially, if Elon Musk sticks around, if this shareholder vote goes his way, what does that look like?
Sure. I think the past 5 or 6 years have been about volume growth. And the next 5 or 6 years are really going to be more about AI and Elon delivering on this promise of fully autonomous driving. In our view, Tesla is leading the autonomous driving race and is going to get there first in terms of fully autonomous driving. And so, given the heavy investments that they're making in AI, and we think that that's going to really show up with every subsequent update of their autopilot software, full self-driving. You see material improvement in the quality of what it's able to do. And so we think that's really going to set the stage for the next 5 to 6 years. It's be more about delivering on that and them actually bringing a robo-taxi to market.
And Garrett, real quick, while we have you, there are headlines crossing this morning just regarding the pricing of Model 3s in Europe. And this, of course, being brought up on the heels of the expected tariffs that are going to be implemented on cars that are manufactured and produced in China and then brought to the EU. What do you think that's ultimately going to do for demand? And how big of a headwind do you potentially see this being here for Tesla, at least for its sales in Europe?
Yeah, I mean, certainly a headwind. The good thing about Tesla is they're very much Western market based. Of course, they have the plant in Shanghai, but the bulk of their sales are in North America and in Europe, and so they're in a different position than they were a few years ago, in that they now have a factory there in Europe, so they can mitigate the impact of those tariffs with their factory in Berlin. So I think they're in a better position to navigate those tariffs than they were previously.
All right, Garrett Nelson, always great to talk to you. CFRA's research analyst. Thanks so much for hopping on with us this morning.
Thank you.